Good morning. Welcome to Pries Capital. You must be the new recruit.
Oh, is this the new recruit?
Yes, it is.
Awesome. Follow me, Mr. Superstar. Here at Pries Capital, we love showcasing art. The stunning bronze dragon sculpture Kiko by the renowned artist Nano Lopez is definitely a showstopper. And these pieces on the walls, the legendary Michael Godard is practically a rock star in the art world. There's art all over the office, creating a vibrant, creative atmosphere to work in and collaborate in. And here is Tyler Pries, our hardworking mortgage loan officer. If you're looking to purchase real estate in the Myrtle Beach area, Tyler's the guy to know.
Looks like you have your hands full. Ashlyn, can you grab a book for him? And I'll see you at the meeting.
And here's Raj, one of Jason's right-hand guys for commodities trading. Good morning, Raj.
Good morning.
Meet the new recruit.
Hi. Hope you like to work hard and play hard. This is a high-stakes environment. Split-second decisions can make or break an opportunity. Welcome to the firm.
Don't worry about Raj. He's a quiet powerhouse, but he's critical to everything we do here. And here's the founder and real estate powerhouse herself, Tina Price.
Good morning. How are you? So glad to have you with us. Can't wait to see you in action. We're just about ready to start the meeting for Jason's market analysis. I will see you both in the conference room.
Good morning, Jason. This is the new recruit.
Hey, welcome. We're glad to have you here. Your skill set is exactly what we need. I love people dedicated to their craft. But hey, I got to get ready for this morning's analysis, so I'll see you in a bit.
Thanks, Jason. You're awesome. Right here, we have one of our many conference rooms. And down the hallway over here, we have the intelligent and sharp-eyed Miss Jill.
Why, thank you, Ashlyn. Nice to meet you.
Jill thrives in the world of spreadsheets, balance sheets, and financial forecasts.
You'll fit right in, so go check out your new office.
And here's your new office. And over here, we have some welcome goodies for you. Just a small thank you of saying welcome to the family. Okay, so I've got to get ready for the meeting, but check out the gym over here, grab some coffee and bagels in this room to the right, and then I'll meet you in the conference room.
Good morning. Thanks for joining us. Go ahead, take a seat. Welcome back to another morning market analysis. Let's get comfortable and dive in.
Another sharp leg lower grabbed traders' attention yesterday, but context matters. This move looks far more than like a pullback from recent highs than a start of a meaningful trend change. That distinction is critical today because it shifts our focus away from panic selling and towards opportunity. When markets move fast to the downside inside a broader bullish structure, that's often where the best trades are born, not at the lows, but in the reaction that follows. Overnight action confirms that idea. Good morning. Welcome back to another Team Day Trader edition of the daily market analysis. Settle in, grab your coffee, and let's prepare for today's trading session. As always, take a moment to subscribe if you're new and explore the resources linked in the description below. Looks like in the chat, good morning, William. How's everybody else doing this morning? What do we have? What screen do I have? I have the dashboard up. Okay. Couple things. There's not too much news that we got to go over. These are not market moving. Unemployment claims, right there. It's a 8:30. So, right, we are. Sometimes I'm always thinking I should move this into 8 o'clock instead of 8:30. But man, I'm already getting up at 5 o'clock in the morning as it is. So, but these unemployment claims, the Empire State, the Philly Fed, manufacturing index, these aren't market moving, so I'm not going to spend a lot of time on these, right? And there's nothing else in the day that's market moving. So with that said, we're not going to spend too much time there. Since we're right here, I will say this did change a little bit. And again, when I say a little bit, right, we're still expecting to keep rates the same all the way into, you know, really June. What changed, I think, was the September looked like it was pricing in a cut, and now it's not, and then it moved to October. Now I will say, right, this is probably going to flip-flop quite a bit because you're at 34.3% and you're at 33.5. Again, this is later in the year in September. This is obviously going to change. I don't think there's nothing out of this Fed Watch tool that's actionable in the right here, right now, because again, January still has this like high 90s. It shifts between 89 to mid 90s % of rates staying the same. And so that's right now, that's in the immediate. These things that we follow or that I keep track of, just kind of, as time goes on, how these shift. And, do I see something dramatic? So nothing's dramatic. So again, I don't want to spend a lot of time too much on the tool. The one thing I do want to we'll talk about today is the opening, kind of this morning's open, as well as a couple market movers, right? So we do have Taiwan Semiconductor earnings that came out. I want to look at that chart real quick, and then we're going to look at Morgan Stanley, Goldman Sachs, Goldman Sachs, and BlackRock. Rates still in that 4.1, kind of the 4.1, staying in and around there, mid 4.15. So nothing's changed, right? Crude had a pullback yesterday. I really like this pullback. Again, it kind of, got really ahead of itself. Yesterday we were talking about 62, and this pullback again is a really decent buying opportunity in my opinion. Gold, again, that kind of gold silver trade, I'm watching that, right? We kind of were talking about that yesterday, so we're going to kind of continue that conversation. And financials still getting hit, so that's why I want to pull these up. So really quick before we get into the ES, let's just look at this because I think it does set the tone, right? So TSM, and then we are gapping. We do have this gap up. So this is again kind of setting the tone a little bit this morning's market action. What else did I say? Morgan Stanley. Oops. Oh, I hate this one. Fucking. Oh, correct this bar. Let's just call it 180. We're gonna say the light is 181. I don't know if you guys know how to correct this. You got the stupid 1766 down here too. All right. So again, earnings. So I was kind of looking over a little bit of Morgan Stanley, a little bit of Goldman Sachs. I'm sorry. I don't know if you guys know how to correct that. So when you go into these, sometimes think or swim, you can correct this bar. So go to the bar, right click, and then you can correct. Now, sometimes since this is just live stream or whatever, I just remove that one bar, but you can correct it with the actual right number. Thinkorswim does that every so often, so you have to go in and correct the bar. But to save time, I just remove the bar. But that's how you do that. You can correct the bar. So whenever you're on the charts, if anybody's using Thinkorswim, that's a way to correct the bar, just kind of FYI. But Morgan Stanley, again, these banks, their earnings are decent and they're just not moving. And in fact, some, obviously since JP Morgan, they're just selling off. So Goldman Sachs, again, earnings were pretty decent. And then again, we're just kind of this follow through to the downside. BlackRock, BLK. BlackRock is moving up, right? So I think the big talk though is that the Taiwan Semiconductor. And really quick, since we're right here, JPM, again, earnings took a lower, really sold off. And then again, I want to watch this. And again, those buying opportunities. And what was another one? Oh, Bank of America. Oh, see what I'm talking about? These stupid correction bar. I'm not going to do that. I'm just going to zoom in. But again, Bank of America came out yesterday, and the earnings weren't that bad, and they just sold that right off, right? So that's my opinion, but I guess that's not really my opinion. You can look at the earnings reports; they were all pretty decent, but then price action sold it off. So you got a little pressure in the financials. Let's get back to the ES. Just kind of keep everybody on the look. So other than that, there's nothing as far as going back to the dashboard that's really important. No news that's going to be market moving today. So we'll just kind of close that out. Let's move into the morning market analysis, because again, I just think this is the telltale in the market. As of 7 a.m., it is now 8:30, right? But when I wrote this at 7 a.m., we were higher by 25 and a half points. We are now 32 and a half with a strong 3.86% net long overnight skew. So again, that is a strong skew. Anything over 2 kind of, right, goes from moderate overnight skew to strong overnight skew. And really anything over 5 is extreme. Those are usually trend days. When I see those in the market. But this is a strong net long skew, and we are opening up not only out of balance, but we are opening up in a gap. So we do have gap rules in play, right? So that's the first trade that I'll be trading is the gap rules. And just the FYI, 10-day ATR is around 56 points. So again, I want to be clear on this, right? Because I think a lot of people, a little bit of analysis paralysis coming in. And I did see kind of on social media, yada, yada, news, right? Yesterday's kind of selling pressure. And, people are just bearish in general. Don't get me wrong, right? We'll be bearish when we need to be bearish. I think yesterday, right, we're trading the chart. And like I said, off the open, and let me move. Well, we'll get into the chart, but let's just talk about things this morning. So bullish on the higher time frame, which we know. That combination exactly where traders get chopped up. We're gonna trade gap rules off the top, off the first of the morning. And then after we trade the gap rules, or I trade the gap rules, right? Then I'm either going to look for a successful defense of support, keeps the bullish thesis intact. This sets up opportunities for bear traps. So I'm going to be looking to buy the bear traps below the range to participate in the breakout pullback, right? This aligns with a clean either day trade setup 4 or day trade setup 6. It's going to be either one of those depending on how the gap rules play off in the open. So again, both scenarios favor patience, clean execution, and letting others make emotional mistakes first. The one thing, right, is the key level that I'm watching to initiate the trade is 69.81.5. We'll look at that and why that is important to me on that level specifically. And then again, it's bullish, and we've talked about this number a few times, and it still is relevant in today, is that 69.70.5. So anything above 69.70.5 keeps the bull thesis intact, and that's the opportunity to buy longs, right, to buy the dips. And right, the initial kind of pressure or reaction that I want to see is at 69.81.50, right? And I want to recap because I think this is important. And so I just want to say that today isn't about forcing trades. It's about recognizing that strong pullbacks inside a bullish structure often set the stage for some of the cleanest reversals of the week. So stay disciplined, respect the process, and let the market come to you. So with that somewhat of context in here, you guys can always screenshot this and you can read it on your own time, right? But let's get into the charts just so we can take that written version and then, right, how does that work, pathing, where am I looking at as far as what's on the chart. On a day chart on the ES, the one thing that kind of I was watching yesterday is, right, we did have that, right, we had that drawn in this channel, right, and then we opened up and we said right off the open this was critical. Either one, this was going to be the go, or, right, it broke down right away, it broke down. So that was easy. Boom, broke down, right? I did not participate in that selling, FYI, just kind of just being honest with you guys, right? I was really just kind of watching that, and was I able to buy? And, you know, I didn't really see a good buy setup, and then boom, it kind of broke down, and it was like, all right, so let's just watch how this plays out. And then I still had, as I talked about yesterday, day trade type 13. So I was like, hey, I was, you know, seeing how the morning was going to play out, be patient. And then when it broke, right, okay, you know, I didn't really like, you know, I'm just shorting at the lows is not a good trade strategy that I really like risk wise. So I didn't take you know, any shorts. And then I was just watching, and then again, like I talked about you guys yesterday, is after that 2 o'clock, you know, where is that day trade type 13 ready to play out? And that played out well. So with that said, going into today, the fact that we closed above, again, the 20 period moving average on a day chart, right? And then what did we do? We shifted over, opened up in the overnight, and then we held that 20 period moving average, and then boom, we're, you know, basically back at yesterday's overnight high. So when we look at this, I just want to, you know, hopefully point out that on Tuesday, God, getting my days messed up. On Tuesday, we made the highest high, right? A high of all-time high, sorry. A all-time high. And so you were pulling back from the all-time high. Now again, right? That's why I always talk about, like, one day don't make a trend change. We have to watch, and then, right, do we get aggressively short and flip our bias? Yesterday was kind of watching that, and then I think after yesterday's action, and as we get into the charts, we'll look, but if it was bearish, and again, I always talk to you guys about if it was bearish, then price action, and I'm going to show you, like, then price action would do this. The fact that we're coming up into, you know, one, we're gapping higher, and then two, we're taking back all, you know, we held the 20 on the day chart, and we're coming up into yesterday's high, has to put us on, you know, whether it's a neutral stance, maybe you don't have to be aggressively bullish, right? We're kind of gapping, we got gap rules, so I'm not going to say, like, hey, the opening, you just buy this thing. I'm not doing that. But, right, it considers some patience in this morning's opening trade to see how this shakes out. Again, you have Taiwan semiconductors moving. You got NVIDIA, right? That's opening up, right? If you look at this, we're at $86, 186. So we're opening up somewhere here. So there's going to be a gap in NVIDIA. I'm sure if I go through Apple, Microsoft, right? And again, we talked about this yesterday, where NVIDIA, Apple, Microsoft is about 20% of the S&P 500. So those are going to be watchers into this morning. Let's go to the volume profile chart. And again, just to kind of break this down a little easier. Oh, sorry, I got to move the crayons over. So again, this would be like a V bottom, and I talked about that. I think that's in the heading, right, of today's live video, is that V bottom. And so again, this is all-time high, and we pulled back, and now this is like literally a V bottom. So how do you usually trade V bottoms, right? I usually watch, right? You get that sharp move, and then price usually rotates in this type of pattern, right? And what I like to do is usually draw up the highs and draw up the bottom, and then wait for this to kind of pull back, and then have good risk to reward ratio where you buy somewhere close to this channel, somewhere close to this moving average, right? We got gap rules, so, you know, fill the gap. And this area becomes, like I talked about, that 69.81 and a half. To fill the gap would be 69.79 3/4. And that really becomes a juicy, you know, spot that I'll be watching. And again, if you get a little bit more of a pullback, which probably lines more if I, you know, really draw this channel, this is just me writing on crayons, we fall into that 69.70 and a half area. So these two initial slash levels, I don't want to call them areas, but levels are where I'm watching to see if on the open, right, sellers kind of react and we get into here, buy a pullback, and then go. If this just keeps on going, again, it'll just go without me, kind of like how yesterday it opened up and it sold down here without me, right? I am never one. I have to have good risk to reward ratios, and I do not like chasing. I know some people, don't get me wrong, chasing is a setup. I find my style of trading, you know, it feels uncomfortable, and then it's not a high probability trade, right? I mean, it does work, you know, but if you were to take 100 of those chasing trades, you know, I would make an argument that 70% fail and 30% go. So it's just not a high probability to chase price. I'll just let price go and then see how structure builds, and then wait for a pullback and then buy the pullback for then, right, another resumption of the trend. And price can just kind of go without me. I do not have fear of missing out. I think if you guys screenshotted that market analysis, I think somewhere I wrote that is, you know, a lot of that chasing on V bottoms and that whole fear of missing out is a real thing. So, yeah. Let's look at a couple other charts. I don't think there's anything to take out of this. I guess I would say this is, I know in whoever's been with me for a while in past episodes, right, we had this level across there at that 70. And again, we talked about this distribution node where you have some backing fill-in. So again, even though we came into this area yesterday and now we're back above, this still, you know, I guarantee you that we will come back to this sometime in the future, where in 2026, we will be back sometime in here to, you know, trade around and fill this area in. So again, this is that carry forward that, you know, this is unfinished business. And I can't stress that enough, that yes, for right now, this is, you know, this is going higher and we're clearly above 69.70, but this distribution node will at some point come back in and we'll trade and get chopped up in here as price moves back and forth and this fills in. So that's, you know, this is a large distribution node that is unfinished. So I just want to kind of state that for the record, so that somebody understands context. With that said, a couple other charts. I want to go to this chart. This is the weekly, right? So not only do we get price action, we get some volume profile. And again, we're back up into, right? So price, this area was developing point of control on the weekly chart, or on the week, starting on Sunday open. And then we pulled away and then come back up, and right, we're back in. This is like value gets sucked back in. Now, again, gap rules are in play. We're in the area, and do they reject? And then, right, does this fail? Right, do the levels of that? You got that low volume node here at around that 81. You got gap rules in play. You got the moving average, which falls pretty close to the 70. If price is bullish, and if this is a V bottom, then what we should get is gap rules come in. They, market participants, fill the gap, right? It holds the pullback. Buyers defend this area, and then it's a go. And it's a go with. And then again, we're targeting all-time highs. Where this, my thesis plays out, or where I am wrong, is if price comes back in, right? They chop around, buyers come in, they just can't get back up, and sell, and buyers fail, and then we come back in, and then we come back in, and then we get sucked back down into here. And again, underneath that 70 will be that line in the sand for me. And again, this is just reality as a trader, is depending on how the price action is live, is I'm more than likely guaranteed to take some kind of position in here long, with a stop. And then, right, if this ends up playing out and I'm wrong in my thesis, I'll just get that stopped out for a small loss, and that'll just be how it plays out. But I really am under the impression this is a V bottom, strong V bottom, and all-time highs are going to be tested until otherwise. I mean, let me talk about this, because I said this earlier. If this was bearish, let's just say if this was bearish, right? So you had the all-time high. This was, right, CPI numbers came out. They pulled it back on Monday or Tuesday. Man, what is, today's Thursday. So Tuesday, and then we came into the market action into here, and then Wednesday, right, they sold it off. This could have popped up, right? And then this would have been another, right, as a two-legged pullback, and then make another low. Right? That's what, if this was bearish, you would have had a high. They pulled it back, right? This is one leg. They would have pulled it up. This would have held. Overnight action would have consolidated, and then they would have sold it a little bit lower, and then we probably would have been opening in and around this distribution right here, and then we would have opened up, filled this out. Buyers wouldn't have got any legs, and then they would have sold it for another leg lower. And then you would have had, right, a high, a leg down, a move up, right? Sellers hold the pullback, and then another leg lower. And, right, you can't just hold these bearish theses. So that's what should have happened. That would have been this would have been the price action that you would have seen if the market was bearish, and the price action would have told you, is you would have consolidated in the overnight. They would have then dropped it a leg lower, and by 8:30 today, we would have been here, and we'd have a different conversation. Instead, right, they pushed it up. They held a pullback, and they pushed it up, right? They broke, right? Like, that's what happened. Is sellers failed, buyers came in, they consolidated. Look at this. There's the inflection high. They pushed up, pulled back where the inflection high is, and then took off again. And again, now we're trading in gap rules. So context is key into this. Here's the distribution. Here's another way to look at it. In another, right, this is without price. This is just market profile. Again, we would have been sucked into this where price would have opened up and we would have been trading down in here into this distribution. And instead, right, we're up and above. And as we talked about yesterday, we're in that higher, if we go back to yesterday's video, anybody can go back, it's archived. And right, we're back, instead of getting sucked down into this value, the accepted value is the higher distribution. So we'll just point that out. And then let's go to nothing else on here. There was something I wanted to say. Let's go to the trigger chart. I don't know. Sorry, forgot about it. Anyways, if it comes back to me, I don't think there was anything else. I guess not. Let's just talk about today's day trade type 6, day trade type 4. We got gap rules. All right, let's bring this in a little cleaner. So again, this, hopefully you can see these price action. So it's very vivid. As we came in, right, we consolidated in the overnight. They took it up, right? And then look at, they pulled back. They held, this is like technical analysis 101, right? Like what it was resistance becomes support. So they popped it up and then they pulled back and held what was resistance and now is support, held support, and then they took back off. And again, now we're trading, here is the overnight high from yesterday's open on the cash. The cash open high. And so, right, we're trading. This is, again, similar to this, where you break out, right? And now you want to hold the pullback. So again, this was yesterday's high in the cash. And so we're breaking out. I know this is like an 5-minute chart. So again, if you look at your hourly charts, right, that's how you can kind of see this cleaner, just in like, not so choppy with all the candles. But this should then, right, pull back, and we should hold the pullback and then take off higher. And then, right, really looking at taking advantage of day trade type 4, right? The failure would be day trade type 6. So if this is, right, if my analysis is completely wrong and you get gap rules, so gap rules, we come in, fill the gap, and then buyers can't get up and they fail, which can happen, right? Then we'll have to watch. And then as we get into here, if they just can't get it and this chops and they just can't still get it, watch for then day trade type 6. So the failure of today, if it fails and it is, bearish, right? You'll be wanting to look at, that's what I just remembered what I wanted to show you guys. And I'll go back to it after I talk about this. It just came to me. So day trade type 6 will be the failure, but I'm really looking for gap rules to play. That's my first trade. And then day trade type 4 as a move higher. The one thing I do want to talk about, and this is where let's go back to the dashboard. And let's go to this, because I think this is important. Look at yesterday's, the volume, right? The VOLD is the difference between up volume minus down volume. And look at, so even though price action in yesterday, right, was bearish in the morning, this held positive the whole way. And then look at the ADSPD. Again, you had this bearish move and the ADSPD couldn't get below the 0, right? It couldn't get negative. And so you had more advancers minus decliners in yesterday's price action. And then the next thing is, you did have a little bit of tick, where, right, you had some analysis paralysis where it was positive on the cumulative, negative, positive, negative. But then as the day went on, and again, this is kind of helps out with day trade type 13 that we were trading yesterday, is then boom, you had the kind of, right, this kind of cumulative build higher. And so you just didn't see that kind of what you would expect in bearish internals to confirm the bearish price action. So that I did want to kind of mention that, and that's what I kind of wanted. So this, again, this kind of, right, if you don't have this dashboard, right, you can go, right, here's a shameless plug, teamdaytrader.com, and right, we have this dashboard for you and these studies built out for you. So it kind of helps you with your understanding what's happening underneath the hood while you're trying to assess, you know, kind of cuts out a little bit of that analysis paralysis. And right, when you're working with the if this is happening, then what should it look like? And if price action was really bearish, confirming price, you would have had the market internals confirming with price, not diverging from what price was showcasing. So with that said, let's go back to, let's finish up and conclude with, it's 9:02. I don't think we have anything. Let's really quick, I guess. We have a little bit of time. Unless anybody wants me to talk about anything specifically, anybody in the chat, then we'll go right to crude, because I do want to look at this chart, right? And again, this is setting up very similar to what we've been talking about, where right, you again moving up, right? We kind of have this move up, and what we're looking for is hold the pullback, right? And then take off again. So this is another example of a breakout higher, and then they pull back, and then this is the juicy pullback. So many people I find chase, and this is the chase where you're chasing this, and the juicy, you know, these are the juicy pullbacks. These are the juicy pullbacks. This is the pullbacks, you know, not, you know, here you get price moving out and then you buy and you chase. That's the wrong way to think about it. You know, let it pull back. So let price, whenever you see these inflection highs, or, you know, again, it's this pattern, right? You don't necessarily want to buy this. The better trade is let it pull back and buy that to then, right, capture this move, not capture from here to here, right? Because again, like, where are you wrong? You know, you're wrong here, right? So then you're risking this for a reward here, right? I'd rather, you know, come into support, have this pull back, risk small, and then for a reward larger. And again, these are on those uptrends. So again, as you're seeing this uptrend and it just pulls back, right? This is the juicy pullback. And then if you're wrong, right, you get out right away. So there's small risk here. And then what you're looking for, here's the high, is then, right, the greater reward. So, anyways, I still like commodities, still looking good. Watch gold as it's, right, we'll look at that real quick since I just mentioned it. Right, this looks like, let's go to the hourly chart. I know we talked about this yesterday, but, right, this just looks like you are building a base up above the inflection high. Going back to patterns, right? When we're talking about patterns, there's this pattern, there's this pattern, and then there's this pattern. And so, right, we broke up and above the inflection high, and then it looks like this pattern is setting up, right? And then for the continuation of the move higher. So that's how that pattern is looking. I would look for a trap low, right? Let price kind of trap below this high. This is a bear trap, and then come back in and then move higher. So the way I would trade this is I would let this trap form. You never know how low this is going to go, so you're not trying to buy these lows. Don't try to buy this because this thing could just fall apart. Let it trap low, come in, come back into range, pull back, and then go. And then now you know where your stop is, and then you get in, you know, try to get in close to these lows, but allow this to get up back in to value, and then hold the pullback and then go. Now you can manage your risk to reward. And that's how I'm looking at gold right now. Is it's pulling back. I want it to get it. I'm looking for a trap on the pullback, right? Get back in, and then that's the trap, right? It kind of sucks in all these sellers, a little bit of a two-legged pullback, sucks in sellers. People think like, oh, it's flipped its trend. Price gets back up into the box, right? This is what some people would call this box trading, right? It's a box setup. You know, really sophisticated words that they use here in trading. You know, trading patterns. Jeez, oh Pete's. Anyways, back up in and then go. So let the trap form. I'm not interested in buying the trap down here because this thing, you know, could just keep on going lower, right? It could come back into this value, right, and then go. So I want to see the trap because that will give it room to run once it kind of gets back in the box, and then, you know, go to a 5-minute chart, try to buy a pattern off the 5-minute bars, and then again I can measure my risk to reward based on that on those inflection lows. So anyways, hopefully that is helpful as we trade into today. And nobody said anything in the chat as far as other instruments, so we'll just let that go. And we'll finish out by saying, hey, if you're live in and around Myrtle Beach and you're looking to trade in a collaborative office environment along with all of us here at Team Day Trader and Pries Capital, right, schedule a consultation. Our address is 100 Sutter Drive in Myrtle Beach, Suite 101. We're right here on the first floor. Here's our phone number if you want to call us. Here's an email if you want to email us. Here's the website if you want to just kind of scroll through and check us out as far as day trading. And then here is priestcapital.com if you want to look at us, right? Portfolio construction, real estate, investing, mortgages, yada, yada, yada. Yeah. Go from there. Anyways, as always, learn, trade, profit, and I will see you guys tomorrow morning. Take it easy. Have a good day trading.